Hey guys, Akil Stokes here, Forex trader, trading coach, and co-founder of Tier1Trading.com, and welcome back to another video. In today's video, I want to give you guys a sneak peek inside a Trading Edge video that I just released for the members on our platform. The Trading Edge is a daily video that my business partner Jason Greystone and myself produce for our members. Jason handles it on Mondays and Wednesdays. I hop in on Tuesdays and Thursdays. And the purpose is not only to show you the best trading opportunities that are on our radar, but to also give you the opportunity to practically apply the concepts in which you're learning through the courses to the live markets. If you're anyone that's ever read a book and then have gone to the live markets, or maybe have done back testing and gone to the live markets, you know there's a massive difference between looking at something in hindsight and looking at something in real time. That open space on the right hand side of your screen tends to drive people crazy. But I want to share a few portions of today's video because I covered a very interesting topic, or at least a topic that's interesting to me. And it was really about what I value in technical analysis. And it's not about if you're a trend continuation trader, you should look at the markets this way, or a counter trend trader, you should look at the markets this way. It's really about learning the skill of technical analysis and how just learning that foundational skill of reading a price chart and interpreting what the market is giving you can help you no matter what type of trader you are. I also go one level deeper and talk about my old days as a stock investor and how, if I can rewind time and go back, how I would now use the skill of technical analysis that I've developed and how that would have helped me become a much better investor. So we talk about how to use technicals in the stock market as well from more of an investing standpoint and not just a trading standpoint. So I hope you guys enjoy. If you do, please leave me a comment below, or if you have any questions, please leave me a comment below. Also, do me this massive favor. Hit that like button, hit that share button. That's the best thing you can do to help support these videos. And of course, if you're looking to be involved, head over to Tier1Trading.com, sign up for that risk-free 14-day trial, get on the platform, introduce yourself to our members, start taking the free content that we have available, and start becoming a better trader today. All right, let's hop into the video. Now, let's go to pound dollar next. Pound dollar, I am awaiting two more potential pattern formations. And pound dollar, let's have another good discussion in the live room as well. I know a lot of traders were interested at this level right here as a pullback trade, this blue line. I was not one of them. And again, it goes back to the opportunity looks good here, right? 240 chart looks good, higher high, higher close, pullback, right? No brainer buy. But the question I always ask myself before I enter any trade is, identify what is the market doing, predict what do I think the market's going to do next. And when I identify these highs here, just like the Euro Aussie example, I identify that price action has moved into a previous level of structure resistance. We haven't violated that previous structure resistance. We haven't smashed through it. We've moved into it. And I see that as the move is being made. If I'm expecting the market to go up, where am I expecting the market to go up to? Well, boom, that previous level of structural resistance. Once price action gets to that said level, I have no more expectations of it going there again, right? I need to wait for a violation and then a pullback, and then I'm expecting it to go there into the next level. So once we hit these levels, it really takes the trading opportunity off the board for me. So when I came into the market looking at this, and I'm looking at a little bit clearer on the hourly, I look at this type of pullback into the market, I really had no interest because, yes, it looks good. We come right down in the previous structure. This is great. You can make the case for a double bottom in a 26.18, but when I'm asking myself, do I think price is likely to go from this level? Do I think price is more likely to go up than down? I don't really have an answer because I don't necessarily think we're more likely to go up than down. Reason being, we've already went up to that level in which I thought we'd go up to. Therefore, what I'm really asking myself is price likely to go to that higher level twice before it goes to the lower level, which is where your stops would be at once? And in my opinion, that's a much less likelihood. So, these opportunities sometimes look great. And obviously, this is just my opinion on the market, guys. They sometimes look great at face value, but they're not always what they're cut out to be. So anyway, what we were watching here in the live room was this break and close below, and we're actually looking for a trend continuation trade. And this is a cool tactic I like to use called think like the other trader, where the focus is on just pure analysis. Doesn't matter if you're bullish or bearish, pure analysis will tell you the answers no matter what side of the market you're on. So if I'm looking at this and going through my IPDE process, I identify the lower low, lower close, the break below structure. I predict that price is likely to go lower. If price is likely to go lower, then where are we likely to go lower to? And that answer is going to be right down here, right? My first level was right here, about 130.42s. And my second level was this area of previous structure support, right around the $1.30 level. So what I was looking for intraday is I was looking for any type of pullback, any type of way to get involved from really this level right here all the way down to that level. And we're looking at the lower time frames and the range bars for that. Unfortunately, that never happened. But in doing that analysis, just looking at structure and even identifying what is going to be a potential bat pattern, right? I'm setting myself up for whichever side of the trade I want to be on, right? So if I am, and I measured that wrong, forgive me, shoot that oop, there, and there. Whatever side of the market I'm on, right, this analysis is crucial, right? If I'm a buyer, well, I'm looking for a previous level of structure. I'm saying, okay, well, I would like to buy here, or I would like to buy somewhere down here. If I'm a seller, I'm saying, okay, well, I know the buyers are probably interested here and probably interested here. So this is probably areas where I want to take targets at. So again, no matter what type of trader you are, this is going to be important. Just because it's pure analysis. And I think we get caught up too much over the bullish, bearish, trend continuation, counter trend, and trying to fit a specific form of analysis to fit that specific way of trading. Where at the end of the day, analysis is analysis, right? The technical analysis is the general reading of the market. It has nothing to do with your bias. It's reading the market, reading the story. What is the chart telling you? What predictions can you make? Now, your personal bias on the market, depending on what type of trader you are, whether it's a trend trader or a counter trend trader, that's going to allow you to filter out which opportunities you're looking to take or what you use for target taking. But we don't want to get caught up in saying, I'm a trend trader, I only do this type of analysis. I'm a counter trend trader, I only do that type of analysis. I'm a pattern trader, I only do that type of analysis. Just do analysis, master it, and you'll be good at everything, because it'll help with stop placement, it'll help with target placement, it'll help with trade entry. All of the things that we need to know to be consistently profitable traders in the market. So potential bat here at pound dollar down at 130.08. You can see we're reversing a little bit right now at that first level, that 130.40 levels we talked about in the live room. Again, I'll just show you real quick what we were looking at for you guys that don't have a chance to join us. What we do is we go down to the range bar charts. So I drew out a zone between really 130.80s and 130.40s, about a 40 pip zone. And my notes may still be on here. Yeah, you can see this yellow line right here. And there's probably another one down here somewhere. I must have deleted it. But essentially, as soon as we saw the break of this structure, this yellow line, we were looking for shorts. Unfortunately, you can see the market just went straight down there. There was no opportunity based on how I trade that I was able to take a short. Typically, sometimes when the market is trending very well, you'll see a lot of ebbs and flows. You see a good example over here, how the market ebbs and flows and ebbs and flows. And as a pullback trader, each of those retracements is an opportunity for me to get involved. This one just didn't do anything. So we'll see. We may retest that level if we get a higher high, higher close above, well, we have one. If we break above this level, I wouldn't be surprised if we came back up to the 3080s. But my day trading day is over, so I'm not too concerned with it. But that's a good idea of what we look at in the live rooms from an intraday perspective. Now, lastly, let's take a look at another pair, Euro Canada. I want to talk about Disney as well. We're going to talk about Disney, the stock, a little bit later. And the full conversation, you can see it in the live room recording, but I do want to show you that chart. Before kind of the big news came out, I just want to review it. Because we talked about Disney from an investing perspective and how I really thought it was undervalued. And, again, not to waste time with the whole conversation again, but the big thing with Disney right now is obviously the streaming service that's coming out. And my opinion on streaming services is that, everyone's going to have a streaming service. TV already looks different than what it did 5 years ago. 10 years from now, it's going to be completely different. Well, everyone has their own individual streaming service, and it's more kind of just, instead of one big cable thing, you're paying for subscriptions here and there. But the big difference in Disney versus some of these other streaming services is that, streaming services gain popularity based off of the content, right? The content is king. Content is king. Content is king. So people like Netflix are spending millions and millions of dollars creating content, trying to get that next big thing, trying to get that Stranger Things, that Ozark, that whatever Netflix original is very popular, because that's what's going to drive people to the service. As you have more options with service, people are going to have to start making decisions on what they value more than others, right? I'm like that right now where, I ditched cable last summer, about a year ago, and I'm a big Game of Thrones fan. Well, guess what? I don't have HBO anymore. I can't watch Game of Thrones, so I have to make the decision: is it worth going with HBO Plus or whatever it's called, HBO On Demand, just so I can watch this one show? Do I value it that much? Or are there other shows on there that I value? Those are the decisions that we're going to have to make. With Disney, the cool thing is the content is already there. They already have an established platform. Obviously, any of you guys that are parents or have grown up at any point in your life, you've probably seen and have fallen in love with a Disney movie, right? You've probably, Aladdin's and your Lion Kings and all that fun stuff, right? Those cartoons, right? All that is going to be available for you to share with your kids, right? Not only that, but for you guys that are adults. We're talking about Avengers in the room. Well, right, the whole Marvel comic universe, right? Guess what that is? That's Disney, 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 Disney. Star Wars, guess who that is? Disney, 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 Disney. So there's a massive amount of content that is already out there. And now there's going to be a place that you can get it. So I don't think developing the content is going to be a problem, because they already have an established reputation. And not only do they have that, but they also have the brick and mortar. They have the Disney World and Disneylands, places where you can go to for Disney, places where they can sell merchandise and all this other stuff. So overall, there's no reason it shouldn't be successful, massively successful. And of course, we added that to a technical perspective, and we looked at this pennant pattern. And what a pennant pattern is, it's essentially an impulsive move, in this case a bullish one, followed by consolidation. And typically the market tends to break out in the direction of the previous trend. So think about it like this: the market moves, takes a break, and then it moves again. And boom, we popped out of that pennant. So from a technical perspective, right, and this is how I knew nothing about technical analysis when I was in the stock market. It was simply intuition and feel, and I'm it weirds me out, because I often wonder, if I were to go back with the knowledge I know now about the technicals, how many better decisions would I have made in the market? And not necessarily in buying and selling, but at the price point in which I bought and sold. Because I would typically just buy it when it felt right. I had no idea if it was cheap enough, and I sold it when it felt right. But in trading, in investing, right? Well, let's take it back some. In trading, we do that IPDE process, right? Identify, predict, decide, execute, right? And that's all based on the technicals. Higher time frame, we identify. What we identify allows us to predict. Once we predict, we can decide how we want to attack it. Once we know how we want to attack it, we wait for it to happen, and boom, pull the trigger, right? With stocks, if you're an investor, which is different than a trader, it's a little bit different. My identify needs to be off the fundamentals. My identify and my prediction, right? The first two parts of that series needs to be off the fundamentals, right? I want to identify value in a company, right? Because I'm longer term. I need value in a company. And then obviously, if I find value, I would obviously predict that it's likely to go up. So I want to establish a fundamental bias before anything. Then to decide and execute, that's the technicals. I'm using the skill of technical analysis to really determine where and how do I want to get involved. So if you're someone that's coming to the picture here, and again, I think the first video was a couple months ago. I know it was well before this breakout, but you're seeing this established bullish trend. You're seeing consolidation. If you're someone that values Disney, and you predict that it's going to go to a higher price point, this is a perfect breakout pattern for you to get involved in. You can trade this breakout just like we do the technicals in Forex, where you can enter prior to the breakout at the lows here in this box we took a look at. You can enter during the breakout as it's breaking out, or the third one would be what? Say it with me. You guys on the platform, you should notice like the back of your hand. I say it every day. I slap you in the, I wrote it on the back of my hand and I slapped you in the face with it every day. Pow, right? Wait for the pullback. So if some reason Disney were to get some disappointing news, short-term disappointing news or everyone overreacts, or maybe we just see a massive amount of profit taking and we start to come back into this channel, boom, that's your pullback trade for an opportunity to buy it up. So a little bit of everything in today's video. I hope you guys enjoyed. Again, if you guys are new, we do this, me and Jason do this every day, or Monday through Thursday. So you get different insights from different coaches. And the goal here isn't to give you a signal service. You guys know how I feel about signal services. I'm not against them. I'm working with one of our traders right now and developing one. I think it's a great way to grow your business as a trader. But I am against mixing them. I think if you're going to run a signal service, you run a signal service, and that's exactly what you give them. If you're going to run an educational service, you run an educational service, and that's exactly what you give them. When you try to do both, you run into a conflict where you're attracting two types of clients, right? You're attracting the client is supposed to learn from you, but they see the signal service as a shortcut. And in my opinion, that's just not you want to keep those separate, in my opinion. So the goal here isn't to give you a signal service to tell you where to buy or sell, but it's to give you a place where you can take the content that you're learning throughout the courses. You can practically apply it to the live markets. You can see how we apply it. You can see the thought process that we have as we go through the different trading opportunities. And hopefully that allows the content to kind of marinate a little more with you, meaning that it soaks in, you take it in, and you can really see the difference between just learning it and using it. So I'll see you guys tomorrow in the live room. Until then, plan your trade your plan. I wish you guys a great rest of your day. And remember, keep an eye out for that New Zealand news. I would stay out of those pairs tonight.